Welcome to Today Breaking News. Here's the highlight of the day. Wall Street stumbled at cost as worry mount ahead of CPI report. New York, July. Wall Street ended in negative territory on Tuesday as growing signs of recession kept buyers out of the equities market ahead of inflation data. While all three major U.S. stock indexes saw between modest gains and losses early in the session, they turned sharply lower late in the day as Wednesday and consumer prices report from Labor Department drew near. Investors are waiting to hear what happened with CPI and earnings, said branch Shop investment officers at Northwestern Mutual Wealth Management Company in Milwaukee, Wisconsin. For several months, we are swung back and forth between inflation fears and recession. We have broadly confused investors who have chosen to go on a buyer's strike. Churchill added, I don't need hear any people saying buy the dip. While the CPI report is expected to show inflation got a hit in June, the so-called core CPI, which chip away violate food and energy prices, is seen offering further confirmation and inflation has peaked, which could potentially convince Paul Kim, chief executive officers at Simplify ETFs in New York, expect year-on-year top-line CPI to be in the height of 8 or potential event even 9% range, and with inflation, worries that overly aggressive moves by the Fed to resign the decades high inflation could push the economy over the brink of recession were exacerbated in the steepest inversion of the 2 years and 10 years Treasury yield. The markets expect the central bank to raise the key Fed funds target rate by 75 basis points at the conclusion of its July policy meeting, which could mark its third consecutive. The Dow Jones Industrial Average (DJI) fell 192.51 points, or 0.62%, to 30,981, and the S&P 500 lost 35.63% points, or 0.92%. All 11 major sectors in the S&P 500 fell, with energy shares weighed down by plunging crude prices, suffering. The second quarter reporting season will hit full stride later in the week as JP Morgan Chase and Company, Morgan Stanley, Citigroup, and Wells Fargo encode post-result. As of Friday, analysts saw aggregate annual S&P earnings growth of 5.7% for the April to June period, down from the 6.8% forecast at the beginning of the quarter. Apparel retailer Gap RMC fell 5% following its announcement that its CEO will step down and that margins will stay under pressure in the second quarter due to import costs. Software provider ServiceNow plunged 12.7% after its CEO remarked about macro headwinds and currency pressures. Other software companies, including Salesforce.com, Paycom Software, Intuit, and Microsoft. The S&P 500 posted the new 52-week high and 30 new lows. The Nasdaq Composite recorded 13 new highs and 145 new lows. Volume of U.S. exchanges was 9.86 billion shares, compared with the 12.79 billion average over the last 20 trading days. Thank you for subscribing our channel. I'll see you in the next newsletter.